Ladies and gentlemen, welcome to Thrive Labs, the place to bring your trading performance to the next level and learn all about trading and technical analysis. I am your host, Mike Williams, and today we are going to be talking, first of all, about the Bitcoin price. Then I want to share my thoughts on some news that has come out earlier this week. And then I will close off this video by giving the answer on a question that I have asked on Twitter. So get ready. It's going to be a good video. Make sure you watch till the end to fully benefit from all the information that I have to share with you today. Starting off with the Bitcoin chart. At the moment, a lot of people are thinking, what is going on the Bitcoin chart right now? What is going to happen next? Are we going to see that $50,000 increase in price, or are we simply going to drop here like a stone, where the bull market, I repeat, is cancelled and we will head to zero, or you get the point by now. So allow me to start demonstrating this. For the last 2 weeks, we have seen quite a big breakout to the upside, leaving that massive range that we've spent in for, the majority of the year, basically, right? With the top side being $32,000 and the bottom side being that $24,000. We have seen a significant increase in price, and since then we have been consolidating upwards and broken out once again, and now currently we are retracing a little bit. So what are my thoughts on this? Do I still look for higher prices? By the way, if you enjoy watching this video, then please help me out here, leave a like and subscribe. I'm really grateful for your support. And let's simply continue on from there. So as a matter of fact, Bitcoin has seen an upwards sloping consolidation pattern over here, where we are not going sideways, we are not in a trending mode over here, but we are ranging, but in an upward sloping way. Now, initially, this is not a bearish consolidation. It is, in fact, a bullish consolidation. However, you have to understand that there are different types of consolidation. And of all the different types of consolidation that we have over here, this is considered one of the weakest of them all. Because there is a very little real structure going on here. And that makes it prone for a larger drop to the downside. So the way that I'm going about this current price action is simply framing it with a channel. Connecting this to the candle close, and to the candle close over here, we have here our upward sloping channel with really nice respect on the midline of the channel. We have broken out initially, come back down into the channel and test this one more time before trading for a while outside of this channel, and now actually coming back into it. Now, how bullish is this at the moment still? So I will give it to you straight away. At the moment, I am still under the impression I remain bullish overall, and I expect higher prices to come as time progresses. However, this might not necessarily have to happen from here on out. We could very well have a larger retracement first before we would see that continuation to the upside. And as a matter of fact, it is really not about what I think or what my opinion is. It is about having the ability to look at the facts that are being presented on the chart. And this is the fact. We have simply ranged slowly but surely to the upside. We have attempted to break out. We failed to do so, came back into the channel, and then we put in a local range outside of the channel before actually now dropping back into this channel, having that really nice, clean, almost double back test, now really establishing our price action back within that channel. So to me, it only makes sense to first see a further drop to the downside and test some lower levels, which does not necessarily have to mean that it is going to be ultra bearish. It can be classed as a healthy retracement, right? But keep in mind that even in bull markets or even in uptrends, you have retracements, as that is only natural and makes sense. So you must be prepared for every kind of scenario. So my current take on the price chart right now is, I would say it does make quite a bit of sense for us to have that rotation to, at the very least, the bottom of this channel, if not lower, before we would see a significant bounce. How am I going to assess whether we are going to get this rotation? Yes or no? Or maybe we're even going to just go up from here. Well, on the more local time frame, and this is more interesting for day traders, I can frame the chart currently as follows. We simply have a range today, and at the moment we are in the process of losing that range, which means that the moment that we do, the probabilities increase significantly that we are going to see a larger drop and that this is going to be turning into resistance. And there we go, ladies and gentlemen, live here while I'm recording this video, we see a really nice and big drop. There you go, analysis done, and directly afterwards it is playing out. This is amazing. For the record, I am of course short since the morning, where I've updated the tribe that I am short, as you can see over here. Let me pull up that post so you know that I'm not talking some random things. As you see here, we are here this morning backtesting this level. We are here having our local confluence. As you can see, my alert is going off currently on my phone, and that means another take profit has been hit. That is how we roll in the tribe, ladies and gentlemen. Beautiful price action here, and yeah, it's quite amazing that I can share this right now with you while I am recording this video. I'm a happy man. I'm looking for lower prices and looking for that rotation to the downside of the channel. Should we lose this channel, then the next level that I'm going to look for is simply going to be set at around that $33,900, so $33,900, with that in between level lining up fairly nicely. It is not exactly, but it is a region with this daily level and the bottom level of the channel lining up fairly nicely with it. However, now hitting the midline of the channel, naturally that is a take profit for me. Now I am in a winning trade, no matter what happens. Even if we get a retracement and I get stopped out on my trade at break even by now, then it is really as simple as it gets. Then I would get stopped out, but still in profits. And that is the power of taking profits while actually trading this price action. So that is currently my stance on the charts. Now, naturally, on the upside, what do we need to reclaim? Well, first of all, we need to reclaim the upside of this channel, preferably backtesting that. But ultimately, we really need to get back above 37,312 before I would be open to higher prices, such as $40,000 or higher. Until then, more downside currently is simply where it's at, and I'm going to be waiting for a new opportunity at lower prices, as my short is continuing to make not only myself, but all the members in the tribe that have traded this with me towards a very profitable day today. So that is my analysis currently on Bitcoin. Now I do want to just have a few notes on a tweet that I've done yesterday, where I have shown you that FTX is suing ByBit to recover assets worth around $1 billion. Now, I think, I'm not gonna lie, I think this post has probably been misunderstood a little bit, so I just want to give you a little bit of additional thoughts. I'm not gonna spend too much time on it, but basically the goal that I want, or the message that I want to convey here is just make sure you don't just follow other people blindly about what they say about what is the best exchange. I'm not here making this post promoting anything of the sorts. I'm just telling you what I noticed 1.5 years ago, and why one of the reasons why I have changed my main exchange from ByBit to BitGet is that I have noticed severe liquidity issues already back then. Now, this does not necessarily have to mean anything per se. However, adding on top of the liquidity issues that I have found over time on ByBit, being like really long wicks, just simply completely empty order books, should this go through, if this actually comes to fruition, then this might pose some further problems to liquidity. And the result could be, due to the lack of that liquidity, bigger traders might want to steer away from this exchange. And that would not be great for trading, because if you are looking to trade some larger size, you will experience slippage, meaning that trading is going to be increasingly more expensive and unreliable. That is what I have meant with this post. And all I want to say is, don't follow people blindly, no matter what they say, whether the liquidity is great or somebody is experiencing issues, yes or no. As a matter of fact, let's just really take a look actually, so that I can prove to you what I actually mean. This is the order flow on the ByBit exchange. And already here today in this price section, we can just see that, no matter what people say, these are facts. These are facts. It doesn't matter what people say. Look at all these zeros. This represents completely empty order books, meaning that if you would place an order somewhere along the lines of here, your order would not even get filled anywhere near here, but you will experience slippage. And that can be very costly. And that is the message that I want to convey here. Just be aware, do your own research, and make an informed decision. Do not place all your eggs in one single basket. Even if you're a really big fan of the platform, I have been trading for a very long time on this exchange. I do think it's a good exchange, but it's not as good as it used to be. And that is one of the reasons why, personally, I've just made the decision to move away from it. I'm not here to promote anything of the sorts. I'm just out here being transparent, sharing my opinions, and I'm not telling you what to do. I'm not telling you what to follow. All I'm saying is, use your brain, think, because we are talking about your money here. Just be aware of what's going on in the market. Do not fall into the trap of just blindly following somebody because, they have, that's all I will say. That's all I will say. And this is just one example. Just look through the order flow. It's just simply not the same as it has been before. And as a matter of fact, now that we're talking about my favorite exchange anyway, we are now seeing that, for example, the BGB coin, which is the base coin of BitGet, has printed all-time highs yesterday. So, we can just simply see that there is a shift in the exchange landscape. There are more possibilities for you out there than there were 3 years ago. Like I said, make your own informed decision, but just don't stick to beliefs. Remain open-minded and take everything into consideration so that you will not be the person that is going to be left behind or, taking the cat in the bag eventually. That is really all I want to say about this subject. Basically, then, lastly, I almost forgot, please, by the way, leave a like and subscribe if you enjoy this information, because I do highly doubt that many people will touch upon this subject, because, there's a lot of business involved in these kind of subjects, and many people are just either not wanting or daring to talk about it, or if they do, it's, that usually try to put things in their favor. That's all I would say. Anyway, moving on, let's go to the question that I've asked yesterday, which is, which setup will give you the most profits? And that is where we arrive at a really interesting question. Had some great responses. Many of those were actually quite correct. So here in front of us, we have 3 trading setups with the question, which of those moves make more profits? Does the trade setup that would yield you over 100% give you the most profits? Does the one that or the second one that would yield you 5% profits, or the one with 1% profits? In the end, and if you do not take market fees and everything into calculation, gonna keep it simple here, it's all about the risk to reward ratio setup. In any scenario, you would risk the same amount, or you should be risking the same amount, and you should be looking at the same amount of profit. So in this scenario, it is not the percentage or the distance that your invalidation area of your trade is away from you. It is about how much are you risking and how much are you looking to gain out of this trade. And all of these setups would yield you literally the same results. And that is the correct answer. And again, I'm going to keep it simple. There's no market fees or no leverage or anything of the sort here involved. But yeah, just wanted to get it out there. I thought it was a really fun and educational drawing, and just wanted to give my thoughts on this. So I guess I want to close off this video with on an educational note. Really, don't focus on how much money you could make out of a trade, or how big of a move you would expect. Whether that is a 100% move, a 5% move, or really a 0.5% move, which is, for example, really great for day trading. 0.5% is more than enough to, make a living out of trading, really. And of course, if it's more, then of course, all the better. But the point being here is the how much are you risking compared to how much are you going to take out of it. And in this example, everything gives you the same result. So final note, I would have to say on here, think in risk to reward ratios rather than how much percent the move is going to be from here on out. Now, with that, I hope that this has been a very educational and quite unique video, because we finally have some volatility while I'm recording this video. And as you can see, good choice that I have been taking profits around the midline of the channel. Of course, not been able to, close off the exact wick, but hey, if we just look at the facts, we are here looking at a 2% trade over here, which is more than enough for me on the day. And we are now seeing a bounce pretty much back into the range. And from there on out, we're going to have to simply observe what is going to be coming on from there. Right now, my opinion has not changed yet. And currently, as long as we do not reclaim this channel to the upside, so I'm talking about doing something along the lines of this, there's absolutely no reason to think at the moment that we're going to see new highs whatsoever. That is what's needed to be done for price to convince me that we're going to go further up. Otherwise, we are simply now back in this channel, and I foresee a rotation to the downside. This can be fast or this can be slow. This is data that we currently do not have to our availability yet, but here we have our expectation, and around that expectation we can make a solid plan. Ladies and gentlemen, thank you for watching. If you want to learn more about technical analysis, then visit our website that you can find in the description below. Sign up, and I would be more than happy to guide you and trade alongside you within our community. Take care and cheers.